Turn that down so we're not echoing. That'll be nice. There we go. I'll talk about. It's been a while. I've been moving here, so
Yeah,
it's got to set up.
yeah, exactly.
Wife,
Um,
wife got a new job, so we had to move down a little closer down there.
Still in Minnesota?
Yeah, yeah, just down a little farther. We're just like 10 minutes down south, a little more, not too far away.
Okay, I was worried you were moving to Massachusetts and you'd have to, change your name to Bigums from Boston.
Yeah. Button's going live. You're going second here. All righty, there we go. We're live. All right, so yeah, go ahead and get these questions up here. So I mean, we've got a lot going on. June, I think, is going to be pretty interesting.
Yeah.
Get rid of this here quick. Where's my little pad here? Well, first thing I think we got to talk about is going to be, the banks, Jamie Dimon. I thought it was pretty funny how he went on the media the other day and he started talking about everybody, attacking these banks, but yet he backs the most hedge funds out of anybody in the United States. And on top of that, he's got gold derivatives short exposure bigger than all of his assets. Also, on top of that, the SVB bank collapse. 90% of the deposits actually went to JP Morgan after a phone call. And it's like, who made that phone call, But what are your thoughts on Jamie Dimon coming out complaining about that and then looking into short selling now in the banks?
Yeah, no, that's all very interesting because, I don't have the source in front of me, but it was alleged that some staff from JP Morgan were basically calling Silicon Valley clients that before that weekend, basically saying, "Hey, look, we're here for you." And as to who made that call, there was rumor that Peter Thiel made that call, or someone in his circle. So yeah, it was certain large Silicon Valley tech guys basically had a conference call and said, "Hey, get out of this bank. We're all in it. We got to get out." And JP Morgan was the convenient recipient of that. Um, yeah, I mean, and here's the thing, right? It's so I don't know what deposit rate JP Morgan's paying, but like Wells Fargo and Bank of America, they on certain demand deposits, they're like paying like a basis point, or maybe they're paying nothing. Meanwhile, as a large bank, all these banks have access to the Fed funds window, particularly the reverse repo. So they're making, now with the Fed hiking recently, they're making 5.05 on their reverse repo. So any cash that, and there are probably all their limits, but like even so, it's like, so say you get a few $100 billion. Well, okay, I don't even know how much they got from Silicon Valley clients or how much they're going to get from Federated Republic, but that money goes into JP Morgan's bank balances, and then what do they do with it? They give it to the Fed in reverse repo. They're making 505, and they're paying basically nothing to get those. They're basically making a 505 basis point spread. It's just, so there's an incentive here to like grab as many deposits as possible, and until you reach your limit. And I really think, I think I posted on Twitter about a week ago. It's like, Jamie, you got to digest this Federated Republic before you can buy anything else, right? Because the interesting thing is, I know that they were sort of in front of Silicon Valley Bank. I don't know if they had much to do with Signature Bank, but in terms of Federated Republic, it was like they'd already given them 5 billion. And, every biggest banks chipped in 30 billion, and they put in 5. So they had 5 billion of their own money at risk of this stupid bank. So I don't know if they were actually the ones shorting it, but as we have no idea how much money they're giving to their hedge fund clients who were probably shorting it. So it comes like, like Jamie, you're facilitating the attack on these banks. So as it turns out, I mean, self-interest for him, they were able to get the FDIC to basically sweeten the deal. So they didn't even have to buy the lows. They just waited for the thing to be, seized by the FDIC. And it's like, oh, please, Jamie, come in and save this situation, because we don't want to lose all our, we only have 100 billion left and we need to keep it. So, please make this bailout cheaper than it would be otherwise be. So JP Morgan came in, they got their 5 billion bank, all the other large banks got their 5 billion bank, because now JP Morgan's got them. It's like, so that Federated Republic was like a little bit of self-interest there, but I think it's again, it's a big enough meal that JP Morgan doesn't have time or resources to go swallow other banks. And so, yeah, it's like at this point, it's like, well, we got our free meal or cheap lunch or whatever you want to call it. And it's like, well, now it comes to the other side because, so one of the things that's not being talked about, I saw a few posts on it. So, JP Morgan obviously an ISDA bank, and this is right up your alley. I'm not as attuned to who is an ISDA member, but apparently a lot of these smaller regional U.S. banks are not ISDA members. So if they want to, hedge their balance sheet, if they've got too much long dated treasuries because they've been buying them and they're taking a huge loss on them, well, if they were hedging them, they would do it through interest rate swaps. But maybe they're not an ISDA bank, so it's harder for them to do a swap. So what do? They got to go to an ISDA bank and say, hey, like, can you, it's like you're co-signing for a loan. Hey, Dad, I need a student loan. Can you be can you be the face of this loan? So basically, J.P. Morgan's facing, being the face man for a lot of the interest rate swaps that are being done by regional banks. So now the problem is if these regional banks are taken down by short selling, well, who is liable for these interest rate swaps when they fail on their swap payments? Well, that could be J.P. Morgan. So, and it's not just JP; it's the other banks as well, right? Wells Fargo and Make America and such. So yeah, it becomes an issue as well. We really don't want the regional banks to fail after all, because all these derivative exposures that no one seems to really have a good handle on who owes what. But if they've been doing a lot of this sort of client facing for the smaller regional banks and the small regional banks go bankrupt, yeah, that's a big problem for the bigger banks. So this is why I think Jamie Dimon had his cake already and was already full, and B, I think it is a systemic risk that he was looking at their own exposure to these smaller ranks in terms of the derivatives links, and it's like, yeah, we don't want this to happen. And so yeah, shorting is bad now, bad. Oh, never mind what we're doing the gold and silver desk. No, don't worry about that. But just, so I think it's very interesting. I do think like the short sellers, like they saw what happened with Federated Republic. They saw the FDIC step in. The FDIC basically gave JP Morgan a sweetheart deal. Why would any other bank that's interested in buying up a smaller bank, why would they bid while the bank's still in operation? They'll just wait for to collapse, and the FDIC will say, oh, please come and bid on this. And, we'll give you some guarantees and all this. So it just, again, the UBS is like dragged in kicking into buying Credit Suisse. Same thing. It's like, we're not going to touch this piece of crap. Oh, but we'll guarantee all the lot. Oh, okay. If you're going to guarantee everything, well, sure, we'll take it over. So same thing. And it just creates a moral hazard now, because the shorts can see this like, oh, like no one's going to step in and try and save these things before they go kaput. We're going to just nuke them. And that's when that sort of happened, and when PacWest was under attack, and a few of the other banks, and whatever the TD1 Horizons, but they backed out of the merger, so Horizons was under attack. So you had like 3 or 4 reasonably good sized regional banks under attack after Federated Republic went down. It's like, yeah, okay, this is not going to stop unless these shorts are warned. So, fire across the bow. Gary Gensler wakes up. Oh, I don't have any coffee, but the White House is telling me I got to do something. So, okay, I'll make this warning comment that, oh, we're always worried about the financial system. And so, yeah, no, there you are. So short sellers took some profit. PacWest went up a few days, and then this week it was under attack again. So I don't think the short thesis is pretty much uninhibited here. I mean, it's like we all know that the next crisis in the U.S. is the commercial real estate loans, and who has the majority of those loans? It's small, medium-sized U.S. regional banks. So the solvency issue is going to be there, even if the liquidity issues are temporarily dealt with. So the short's going to keep dumping these things until they're basically told they can't. Will the short selling ban actually matter? 2008 says it didn't help. In fact, it probably fed some panic, but I don't know. That's why Jamie is basically making these comments now, is because the short sellers have to be warned off. And in here, I don't know if this is going to preempt another question, but I was pointing this out on LinkedIn and I got some blowback, but I think it's a valid point. So the FDIC has about 100 billion, and that should be enough, but what happens if you had 5 or 6 regional banks go down at the same time? And if the FDIC couldn't get enough people to come in, and they had to make all these sweetheart deals like they did for JP Morgan, you start to run out of that 100 billion in their reserve fund. So the FDIC said, well, there's no problem. We just go get the Treasury to write a check. Well, if the Treasury can't write a check because there's a debt ceiling imposed, then if we were to see several regional banks collapse before the ceiling was raised, then the FDIC has no money to bail them out. So this is what I was thinking is like, again, Jamie and the other basically have to step in and say, hey, this is, this has gone far enough. You shorts, bad shorts, bad shorts. Oh, forget the fact we're lending money to you, but no, bad, stop. So I think that's what happened is just like there's a slight, however small risk of Luke Skywalker blowing up the Death Star. And so I think that's why Jamie basically stopped that and said, look, the system integrity means you guys need to stop doing this, and you need to be, if you short, PNC Bank and then you tweet about it, you should be, fined or, dressed with a full consequence of the law. Right. So forget the fact that you've been doing this to us for 2 years, but that's sort of where it's at. So I think that,
Hey, that's what Ken Griffin said, word for word.
yeah, exactly.
It's us that crashed the teachers' pensions fund, remember?
What's that?
It's us that crashed the teachers' pension fund, remember?
Oh, yeah, exactly. So, but I was somewhat surprised that there wasn't a bigger problem with the banks last week. I expect, again, I don't think this is going to be over by any stretch of the imagination. The shorts will be, they're not stupid. They'll see these comments and maybe scale back positions, but the money is too good to not keep going unless they're prohibited from doing it. So I expect more pressure on the regional banks, especially as we get to, you keep alluding to June and yeah, these swap resets and everything else, it's going to be a nightmare for the banks. So there's still some weakness that's definitely going to be exploited.
Well, yeah, and then JP Morgan, now they can use that loophole that they use to be able to get around that deposit limit. So they'll be able to scoop up more and more and more and get way beyond what they should.
Yeah, the only problem with that is, as I said, if they're at their reverse repo limit, they'll have too much cash. I mean, as long as they can find a place for it. But if you like, this is the big problem with the regional banks right now. They've been tightening their credit standards. They're not profitable because they can't find anything to loan that's a reasonable risk. So they were investing in bonds, and they couldn't afford to pay more for deposits because they weren't profitable. So this is the problem: is JP Morgan takes all this cash, but they, at some point you got too much of it. So that's the only thing I think. I think JP Morgan's sort of got indigestion right now with Federated Republic.
Okay, I'm going to switch our question around because it kind of goes in what we're talking about right now. So with the FDIC being maxed out, you saw that now these banks have to pay billions in extra fees to try and replenish it. But that was only 3 banks. There's reports that 722 are already at unrealized losses exceeding 50% of their capital. But at the same time, they're showing 31 banks now are actually negative.
Yeah.
Do you see a bank run still coming? You kind of went into it, but what do you see happening with the FDIC about to be maxed again and more banks crashing? Or do you not see any more banks crashing for a little bit?
I read it, and I could be wrong, but I briefly read that FDIC statement that was much like, got it first thing in the morning. I was like, okay, where is this? They finally came out in the afternoon. So yeah, they're basically doing I wouldn't call it a clawback, but they're charging a fee for basically the larger banks to subsidize the losses that the FDIC had to take in making the depositor of Silicon Valley Bank and Signature Bank whole. I don't know if that was the same for Federated Republic. Might have been. So, but anyway, yeah. So it's going to be over 8 quarters, and it starts in 2024. So these payments won't be made yet. But as I said, it's like, it is free money. Like if JP Morgan's getting all these deposits at near zero cost, and they're basically able to make 505 risk-free, credit-free at the Federal Reserve, that's 505 basis points on billions. So yeah, like that's a free gift that needs, I think that all the FDIC is trying to do is get some of their money back. But it won't be, again, they're giving them at least a 6-month window before the payments start. But yeah, like you mentioned, like that report that 722 banks are having huge mark-to-market losses, and whatever the 22 or whatever are already in the red. I mean, totally, the balance sheet's completely, they will argue that, oh, well, it's just mark to market, and as soon as the Fed stops hiking and markets start pricing in rate cuts, well, the bond treasury will recover and we'll make all this, these losses back. The problem is it's inflation came down a little bit for the last report, but still elevated at 5%. The Fed sort of has a target of inflation of 1 to 3, just like the Bank of Canada has a firm target of 1 to 3. So if you have inflation of 5% and it's not really aggressively falling. Meanwhile, you have substantial job gains continuing, even though that's a questionable number. But the Fed is not likely to start cutting this year. So that's a big debate whether they're going to pivot. That's been a big problem, is people have been thinking, oh, the Fed's going to pivot and save us. The Fed's going to pivot. Well, the Fed hasn't pivoted because they made a colossal mistake 2 years ago, and they said inflation was transitory. They were completely moronic about it, and they let inflation get out of control, and their credibility shot. So they can't afford to be seen being any, they have to be hawkish until they can't. And so they're not going to cut this year. And so those losses on those bank the off balance sheet losses, whatever you want to call them, they're not going to go away anytime soon. And meanwhile, we have this potential solvency issue with a lot of them in terms of commercial real estate crisis coming up, because a lot of these commercial real estate loans are going to be coming with resets as soon as June. And they're not, the people that are renting space from these guys aren't going to be able to afford a rent increase because the economy is supposedly slowing. And it's just like it's one of the most obvious crises that, you almost wonder, is it going to happen because everyone's talking about it? But I do think it's a real issue. And I think
Well, not to cut drop, it's at 1.5 trillion due in 2024.
Yeah, exactly. So it's, I try, when I used to talk to Crazy in these space calls and I mentioned this stuff, it's like, it's hard to stay optimistic because there's just so much bad news out there. But this is really a big issue. They're going to have to do some kind of, like, they need to get the debt ceiling fixed, and then they're going to need to print money, and then they're going to need to pump up the FDIC, and they're going to need to change the deposit rules. They're going to need to basically stop this wave of deposit outflow from the regional banks, because otherwise you will have all these regional banks fail. So there's a whole bunch of stuff that needs to happen, and the first thing is that the debt ceiling needs to be resolved. And then, how are they going to pay for all this printing? Well, how are they going to disguise all that? Digital currency. So you can sort of see all the dots connecting. Because otherwise, the U.S. system's going to implode. So,
well, perfect. You got right into my actual question I wanted to ask you earlier. So, national debt is at 31 trillion. They want to raise it again next year alone. The interest on that debt is 1.1 trillion. It actually surpasses our national defense spending. What are your thoughts on raising the debt ceiling again? If we raise it again, we'll rate, because obviously rates will have to go up along with it, because it'll be even more riskier. Debt to buy. Do you think that will make people want to get away from those bonds? Do you think that will cause the United States to spiral out of control with those bonds, or what do you think will go on with that?
Well, so right now, you said the credit default swaps are very elevated for U.S. debt. And the funny thing is, well, I don't know if it's funny. The odd thing is that, everyone, if I go on LinkedIn and post something, I posted this whole thing about this bank issue and the defaults and all this, and oh, you're just fear mongering. It's like, oh, they assume that the debt ceiling will get raised. So if that's the case, why is the default swaps on U.S. Debt so high? I think it's just like, this is an underlying problem that's going to keep continuing and continuing. As you point out, like, if you raise the debt ceiling, okay, great, but then the Biden administration spends a few $1 trillion more because they have to. So right now, again, I mentioned the Fed is not likely to start cutting. So the Treasury market rates that we're currently seeing, they are inverted. The longer term rates are expecting cuts, but in the meantime, what is the U.S. The Treasury has a certain debt schedule and how they issue issues. So they issued a lot of short-term debt in the last few years. All that comes due at a higher rate, and then so the question is, how do you pay for that? Are you going to stop spending military spending when you've got all these issues with restocking your inventories because all your old weapons are going to Ukraine? So do you really want to cut military spending? No. Well, do you cut retirement spending? Well, there's a huge cohort of people retiring in the U.S. and they've been financially impacted by all these crises. They can't afford to have their Social Security benefits cut. So how are you going to do that? And health, again, population's older. How do you cut health benefits? So I don't know, unless there's some magical source of revenue the U.S. can find, I think they're going to have to basically print more money, and that's inflationary. So I think the default swaps are just saying that while this current crisis is bad, it would be asinine for them not to come to a solution. But the problem is that there's never a permanent solution because the political system encourages pork barreling. And I pointed this on LinkedIn the other day. It's like you got like the Iowa Republicans, that caused an issue with trying to get an agreement within the Republican Party because they wanted special, ethanol benefits to keep, so every time there's one of these debt ceiling crises, there's opportunism by various political actors to try and, get something out. So instead of having something reasonably resolved, it goes to the last minute as everyone tries to get the little, needs and fix it. And all it does is just add to the bill. And so, again, unless the U.S. can find some way of increasing their revenues dramatically, that they're just going to have to print money, and that's inflationary, and that's going to mean higher rates down the road. And so, ultimately, the risk of default is increasing, regardless whether they get to get to an agreement on this particular ceiling. So, how do you pay for it? What if they raise it to 34 trillion? They're going to raise it to 38 trillion. It's like at some point it has negative impacts for the entire U.S. system, the currency, and this is why, again, people look for alternatives like Bitcoin and gold, silver, and yeah, I mean, it seems so obvious to me, but it's not gonna. The time of it is whether this happens. And again, I think the derivatives market you're interested in will probably be a big factor in this because a lot of unknown damage is going to happen when these things get finally, whatever phase 6 finally kicks in fully. The damage is going to be significant, and all these swap resets, and again, I don't know what's going to happen to these U.S. regional banks when their swaps get reset. So there's all kinds of unknowns, but I do know that they have no recourse but to increase the debt ceiling, and they're going to have to print money to pay for all this. And ultimately, it's bad for the U.S. dollar, and ultimately, it's bad for the stability of the U.S. Credit rating. And I think it will get downgraded, regardless of the debt ceiling agreement. I suspect they will get downgraded anyway. So yeah, it's
They did recently, actually. That gets into my next question. Actually, what do you see happening with the dollar moving forward?
So there's, again, I do have a longer term view the dollar's going to weaken. The issue is as you go into an ugly beauty contest, the U.S. still has attributes that make it more desirable than a lot of the other potential competitors. And there is no real competitor for the U.S. dollar in terms of reserve currency, which is why I think, the renminbi is not going to ever be by itself. The Chinese have not been able to grow their capital markets to the size that is necessary to replace the dollar. But they are making, a lot of efforts to try and get people to switch off dollars. And you can see it from all these agreements that are going through. It's like, whatever Bangladesh and India agreed to use rupees to do all these little, Brazil looking to pay for, China goods through renminbi. So there's all these little side agreements that are going on that are going to basically long-term less demand for dollars, as the dollar is not going to be the prime currency for a lot of transactions. But you got to understand how dominant the U.S. is right now. It's going to take a long time for that to play. But the problem with this is sometimes it's a sentiment thing, whereas U.S. dollar, it just has the confidence of capital markets. But all of a sudden, if something just snaps, and it could be, it's like anything, like it's a human body. It's like you can feel invincible, for 40, 50 years. I'm feeling this way right now. It's like all of a sudden things start going wrong. It's like, what the fuck? I didn't do anything new. It's just like, accumulated wear and tear over 50 years. So this is what happens with the dollar. It's like if you take 1,000 small pinpricks, at some point something's going to break, and I just don't know when that is for the dollar. I do think it's negative, but will you see imminent dollar collapse? Probably not. But I do think this whole debt ceiling issue highlights the biggest weakness for the integrity of the U.S. financial system. It's like, there's no solution but printing more money, and that ultimately makes the U.S. dollar less attractive. So it's just a question of time, whether it's 5 years, 6 months, 20 years. But the Roman Empire, the Neris took, they were debased it, colonists debased it in 180 AD, and then they debased it again. But the Roman Republic still lasted an extra 200 years after that. So, sorry, the Roman Empire. No.
Yeah, I mean, eventually, all this crime catches up to it, and there's nothing they can do about it, especially when it's by the trillions.
Yeah.
So, The next question here is going to be market money funds, treasury bonds offer 4.5%. Apple's coming out offering 4%. Credit unions offer higher rates, and big banks are still offering, 0.4% or
Yeah.
12.5 billion just left the banking system again last week. I think people are waking up and moving, away from these banks. Do you think that banks will actually be able to afford to be able to give out higher rates, or do you think that they're stuck currently?
I honestly think they're stuck because it said I would have thought they would have already done it. Like this was what I was doing, a few years ago for Scotia. I was basically in charge of bringing in deposits, and we were very like I was when I got joined the bank. I said, well, I hadn't been looking at the deposit side. I said, in the U.S. people don't care, but the banks don't care about deposits, and they really didn't because they were basically not being very competitive with deposit rates at all. They said, no, if you want to give, we don't really want your money. Go put it in treasuries, go buy a money market fund. And so that was what they were telling. This is what U.S. banks were telling clients a few years ago. But in Canada, the Canadian banks have always been very cognizant of deposits. There, I won't bore you with the structural reasons for that, but mostly it has to do with the fact that U.S. mortgages get sold as soon as they're issued, whereas in Canada the banks hold on to the mortgages a little longer. So the Canadian banks need the liquidity because they can't sell off their assets as quickly. So, but anyway, in Canada the banks for their biggest clients, so the Bank of Canada raises rates, they immediately match that, and so like it's like it's not an issue for Canada, but in the U.S. these banks have said, hey, you know what, these customers, they have choices, but for whatever reason it became like a weird, no, we're paying zero. The money market funds are paying 3%, but we're not losing any deposits. Yeah. Oh, look, the Fed raised rates to 4%. We're still paying nothing, but we're not losing any money deposits. Ah, okay. Well, let's buy more bonds. It's like it was a complete like Silicon Valley Bank, the management were idiots because they said, oh well, they're not leaving, so I guess they're not going to leave. But the U.S. deposit customer, once money market funds hit 5%, it's like, oh, something. It's like in stats we call it the regime shift. It's like the underlying factors that were at play have now completely changed, and psychology is weird, and so like yeah, like I don't care that I'm missing out on 400 basis points, but 500 basis points means something to me. It's like 99 cents versus a dollar. Again, the weird psychology, like 99 cents in a dollar is 99 cents is really not that much cheaper than a dollar, but that's a sale, so it's the psychology behind finance is sometimes weird. So this is the thing, is like, yeah, we had all this money leaving once money market funds hit 5%, and so all of a sudden it's like, but the banks had based their profitability targets on the fact that they weren't going to be paying more than say 4 basis points. So all of a sudden they've had to make a choice. Well, are we going to start paying up for these deposits, but I'll kill our P&L, and we are all judged on our basically short-term performance, and that'll kill our next, our earnings will go down the toilet if we do this, and that'll cause the short sellers to go after us. So they're really no position to raise rates on the deposits. And yeah, you made a great point about Apple. I think that's a really telling thing. It's like it's a scary thing. Meta, what, a year or two ago tried to launch some sort of whatever digital currency. Name of it is escaping me. They were squashed in that, but I do think that it's a bizarre world where tech companies will start to become not near banks. And I mean, I remember when Robinhood a few years before 2018, so well before the buy button thing, but they were trying to create a deposit account, paying 3% when the market was not paying that. And it's like, well, they didn't have a deposit license, so I'm not sure what Apple's doing to get around it. Maybe they did all the paperwork that Robinhood didn't do. But yeah, like you're going to have Meta, you're going to have Apple, they're all going to have some sort of facility where you can put funds with them, and you're going to earn more than the bank is paying you. So ultimately, I think this is a trend that's not going to stop. It's like you're going to see uh, funds flowing out from the regional bank system into like near banks, Apple and such. And this is another reason why these regional banks will be under pressure by shorts. So the U.S. administration has to figure out exactly what they want the financial system to look like, because it's not going to stay the same. And you know, I would argue that the U.S. banking system is an aberration. rather than the norm. Canada, we have 6 big banks, we have credit unions, and yeah, you mentioned the credit unions, and I know you're a big fan of credit unions. So I should point out that that is probably still to me a niche. People are going to be stupid and go to JP Morgan or Bank of America before they'll think of a credit union. But ultimately, if you have a credit union in your area, it's not a bad thing to consider moving that. Obviously, the big problem in the U.S. is because of each state had its own banking law, banking regulations and stuff, which is why for ages you had all the gazillion small banks because they were all state bound. The restrictions to U.S. banking system only started to be unwound in the late 90s. I see. So that's when you started to have Citibank bought Chase, or sorry, JP Morgan bought Chase. Citibank, I forget who they bought, but you had this big amalgamation of entities in the late early 90s. But you still have all these small regional banks. It's just a carryover from old banking laws. And I don't think it's an efficient system. I do think the U.S. regional banks are going to consolidate, and a lot of those funds are never going to come back, and they're going to go to Apple and whoever else. So these banks can't afford to keep these deposits. And so, authorities have to figure out how exactly they want this landscape to look like, because otherwise you are going to have like 5 or 6 huge behemoth banks, and then the regional banks will be underserved, and that's where I think the credit unions play in. It's like, so if you lose your bank in Topeka or whatever, but there's a local credit union, do you really want to bank with Citibank, who's in New York and doesn't give a crap about you and your farm loan, or do you want to use a credit union? So I think there's a scope for growth for credit unions, just because for regional areas in the U.S., especially the Midwest, that are underserved by the big banks in New York, and I think that's something to look at. And I do think they, like in Canada, the big 6 are everywhere, so it's a slog, death fight with the credit unions. So the credit unions have their special niche, but they're not that prevalent. But I do wonder in the U.S., because the big banks are so concentrated in certain major geographic centers, whether the credit unions will have more scope to replace the regional banks when they fail.
Yeah, and the reason I push credit unions also, they'll give you a better rate than the big banks. They're going to give you lower interest on loans as well. They actually care about you. Their members, they're voted on. They're there. It's not like you said, some random guy in New York. But the one thing I wanted to ask you here quick is, I don't know if you saw that Bloomberg article the other day, but it talked about how the Treasury and the Feds may have to come in and actually restrict your rights as a U.S. citizen to pull money out of the banking sector.
Yeah.
What are your thoughts on that? I've been saying that for a while, and I'm because you're still seeing, like I said, 12.5 billion again left. When people start to realize there's no incentive anymore to sit in a bank, you're better off going in and getting these treasuries, which is funny because in the end of the day, the government, they owe that debt to us. It's 22 trillion to the public. So right now, if you get those treasuries, you get into that, at least you're now collecting interest on the debt that they already owe you.
Yeah.
But what are your thoughts on the
I
restrictions?
did see that story. I saw the headline. To me, it's like, and the first thing it's going to do is it's going to just spur panic. It's like a bunch of people are going to see that, and they're going to listen to you, and they're going to say, holy crap, like the government's trying to restrict I'm going to get the money out now. So I would, it's kind of self-defeating. It's like you're announcing these proposals, but in the meantime, you're going to just re-encourage the trend that's already happening. So yeah, I mean, as I said, you look on the fine print, you look at the commercial bank, real estate crisis that's about to come. You look at basically the forces that are now saying, look, your small regional bank, the Janet Yellen, depends on what her mood is on a given day, whether Joe Biden had his ice cream or not, whether she's going to bail out your bank. So, if you're at Wells Fargo or JP Morgan, you're not likely to get your bank fails. So, you're going to want to leave this bank anyway. So they've got to do something to stop it. But it ushers in all kinds of other things. It's so you're going to basically limit withdrawals. And people have already been screaming in the U.S. It's like, well, I don't know what it's called in the U.S. In Canada, it's called FinTrack. If you want to take out $10,000 in cash, it's a big hassle because it's a money laundering issue. You got to, why are you taking this cash? What are you going to do with it? Where are you going with it? And then it's like, how many, ID? We need to check your ID. It's like, when were you born? Who's your mother? Where'd your mother go to high school? It's like, come on. But they make it a big hassle to withdraw cash, and I think this is just going to reinforce that as well. So. Uh, it's partly to stop the regional banks from being totally destroyed very quickly, but I think it's also precursor to capital controls, cash controls, switching, making it even harder to take out cash because it's prelude to the digital dollar. And I mean, it's like it it's it's easy to get all alarmist, but the conspiracy theories when it comes to the digital dollar, I don't think they're too far off the reality. So I do think this is another step in forcing the difficulty of getting cash out of a bank, and it's a precursor to basically the destruction of the crash economy because of course you can't tax the underground economy, which is all cash. So the government wants all that money that's currently not being reported, so they want to limit cash transactions, especially large size. You'll still always have your cash to do stupid things like I don't know, buy coffee, maybe even not that. If they can figure out how to get Bitcoin so you don't get charged $42 to buy coffee with Bitcoin, I think that's going to be the total death knell of cash. But anyway.
Yeah, I was just gonna say, and then one of my questions was, oh, you saw that governor? He was a or senator. I mean, he was attacking crypto and how they can just create money out of thin air, and only they're allowed to do that because they're the government. You got J.P. Morgan, who's got a short, position bigger than their assets on
Yeah.
gold, which is another area for people to run to. So I mean, these guys are doing the stupidest things I've ever seen, and like I said, there's so many more options to get away from this dollar, and I just see the dollar weakening pretty rapidly here going forward. But my next question is going to be when I said that rich when they start turning on each other like these medium banks and stuff like that, they're going to start giving out secrets here, and then right after that, the DTCC news came out about them having two private data feeds and being able to sell information on those two private data feeds. What are your thoughts on the DTCC being corrupt? Who would have thought in the data feed?
And like this is part of my journey because I've been in the markets for like 30 years, but for most of my career, all the DTC was this stupid thing that my settlements group would had to make sure that my bonds settled with. So I never gave them a lot of thought until I started actually trading aggressively individual stocks, and really only until I got into the meme stocks because again, it's like I never paid much attention to settlement issues before. But my God, what an education in the last 2 years. So yeah, if someone like me, like if you go on LinkedIn, and I would guarantee you 95% of the people in finance would have no clue about the DTC and their inner workings, whether okay, oh, well, the head of Citadel operations is also vice president of DTC. Okay. They would say, oh, that's odd, but yeah, okay, we see that kind of like, it's just, yeah, okay. Um, but like all the stuff that's gone on, and I can point to the GameStop split dividend being mishandled, and then of course the ape thing debacle. But yeah, the more you dig into the DTCC, the more corrupt it gets, and it's just been sickening for me. It's like not it's not a government regulated, it's a self-regulated agency. It shouldn't be, and it really shouldn't be. And that's the biggest thing for me is FINRA and the DTC need to be revamped, very much so. But yeah, no, I mean this. Oh, so they're selling certain parts of data to certain interested parties, and again, the customer base for what they're selling is very limited. But guess who? Guess who that customer would be? Prime customer would be our friend Ken Griffin and his $100 million AI model that can handle this data. So it's just like you know. I don't know really much more I can say other than that the U.S. system, in terms of the settlement side and the data side, Michael Lewis wrote Flash Boys, and I was like, is this really happening? Wow. Okay. And of course, Ken Griffin attacked Michael Lewis. You can go back on YouTube's and see everyone attacking. I can't remember his name. The Canadian guy at Royal Bank who was created IEX. It's like they were attacking him. It's like this is a real thing. These hedge funds are using high frequency data to front run everyone else, and so this data packet is like the DTC is basically giving a huge advantage to certain parties that can utilize this data, and there's not many of them. But you can say a lot about Ken Griffin, but you can't call him stupid or nearsighted. This guy is brilliant, and he is basically seen way ahead of everyone else how data and high frequency trading would dominate things. Is he entitled to all his billions? That's a hard one for me to answer. I think he's certainly an innovative guy, but again, he's crossed the gray line to black so many times. I don't really know. Again, yeah, should he be in jail? Probably, but I mean, how are you going to get him there? So, but it's just like, yeah, this DTC, they've got to get FINRA and the DTC restructured. And I see like this congressman on Twitter talking about, corruption versus retail. I can't remember which state he's running for, but I do believe there is an undercurrent of some people that understand that retail is a force to be reckoned with, or getting to be a force to be reckoned with, and financial structures need to be fixed because it benefits the 1%. And I do think that this may be a political podium someone may stand on, hopefully the next election. But I think if not, I mean, we're not going away. Like, this is 4 million AMC shareholders. How many other, MLN, MMLT, LT, can't even say the damn thing. You know what I'm talking about. GameStop, everything else. It's not going away. Like, collective memory of people on the internet, all these posts are not going away. So, anyone who cares to look, they'll find, how bad the market manipulation is, and it's only going to get worse if it doesn't get fixed. So.
Well, yeah, and I mean, when you look at the DTC and the members, it's like, how can Citadel and Virtue be on there? JP Morgan, all these people who are doing, selling all the ISDA contract. I mean, they're the banks who are doing the shorting, backing all the shorters. I mean, obviously, anytime they're going to get involved, it's going to be to back them, because in their best interest, it's, to back the shorts, or they go under as well. So
yeah, it's like the FINRA is basically designed to be a rubber stamp for the investment banking industry. It's like, yeah, we want to make sure that everyone that's taken the Series 6 is, we're making sure the exams have to be passed, and we need to, make sure that these people are ethical and all this. But ultimately, again, they're self-policing themselves. It's just like, they put out all these fine standing things. But yeah, like the whatever vice president of Goldman Sachs is on the board of FINRA, and yeah, they get fined $3 million for 10 years worth of offenses. It's like
10 years, yeah.
It's like psychotic.
And that's the thing. They have like JP Morgan, you have 236 fines, violations. I mean, the price doesn't seem to go up the more violations they get, at least. Like, why is it the multiple offenses doesn't seem to matter? Why are they not barred? You know what I mean?
Yeah. And the problem is like, we can see all this stuff, but there is no. I was actually asked by someone, do you have a white paper on all the retail manipulation issues? And I said, the one that was the hard part. It's like, there's a lot of information out there, but there's nothing condensed. There's no one that's written like a manifesto of this is. The only one I can think of is Parker Petit, and of course he would put it. He went up against Cahodes and got in jail for. It's like, do I want to use a convicted guy as the standard for what we need? But Parker Petit at least wrote about all these things that naked shorting and how they're manipulating things. I just wish there was like that. That I think is the next. That has to happen at some point. Someone brilliant has to collate all these articles. Make sure get out the FUD and the nonsense from the stuff that actually is real. And that's the problem. So much stuff that's gone on Reddit and so much stuff's on Twitter. It's like, it's a trust me bro thing, and it's like some guy who's just trying to get attention and made up a story that didn't actually, as bad as it is, it's like, what is the real manipulation versus what is a speculated? And that's the thing. If you wanted to say, hey, SEC, like, again, even knowing what David Lauer is going on with that, Gary Gensler, how much of his, like, he's got to be very selective of what he's presenting, because it's like, there's a lot of stuff he could present to Gary Gensler, but I don't know if it would be able to be fact checked. To like I said, one thing that strikes me is, I remember when I started posting this on LinkedIn, I posted some stuff that people were talking about. Oh, like, here's Citadel's dark pool, and it's like, so I'm not even mention the guy's name because he's on my Warb name. But anyway, I posted one of these guys' YouTubes, and I said, this guy's brilliant. And turned out that I had 5 or 6 other people from, I think I don't know, it might have been even you. It's like, hey, this guy's an idiot. He doesn't know what he's talking about. And it's like, oh, great. I just posted a morons piece on LinkedIn. So, there's a lot of DD out there, and some of it's, it's hard to know what's accurate. But yeah, it's like to get all this good DD and put it together and say these are the issues, and then getting someone important to pay enough attention to it to make it a platform. That's what I'm sort of hoping happens, but maybe a long way away from here.
Yeah, yeah, that's why I feel like a lot of people, started getting these other countries started getting away from the dollars. They see what's happening, and we're just a ticking time bomb. That's what I've been trying to tell everybody. We're just a
Yeah,
ticking time bomb at this
I
point,
honestly,
and it's
yeah,
just going to get
I
worse.
mean, it's been said a billion times on Twitter. I honestly, I'm sick of the U.S. equity markets. I will probably, as soon as AMC wraps up, I will be very hard to want to play in it until some significant changes are made. Just because look at all the stocks that are just manipulated, and it's like every time there's too many instances of like, oh, this needs to be covered. Oh, they didn't cover. And the fact that this AMC thing is dragging on 2.5 years is just like, they're using every trick in the book and you making up new tricks. And it's like, come on, right? It's like, the FUD has been ridiculous. Anyway, I'm with everyone else that says I'm sick of this stuff, but I'm not giving up. That's the only point is I'm pissed off enough that I do want money out of this, obviously, but I'm not giving up on AMC until the other side breaks because it's pissed me off too much. Too much of my life is put into this, so it's like when you write the CFA exam, you got you got to do 3 years worth of work experience and write three freaking brutal exams. And if you fail the last one, which I failed level 3 the first time because I didn't study enough, it's like, well, I'm not giving up. I put too much of my freaking life into this. So same thing with AMC. I'm doing it until I'm done with it.
I mean, yeah, that's the thing. Like I said, a lot of people after this, I feel the same way. They're going to get out of it because unless you go ahead and you learn how to just pick off the crumbs, pick off the right plays that they want to allow you to have, do the TA, learn all that side of things. It's like you realize why bother. It's corrupt as fuck. They control every aspect.
Yeah. Yeah.
But
And that comes down to, again, market structure. And a lot of it is like the DTCC, went from paper based to electronic based. The regulations never caught up, and Congress never had the motivation to catch up. And every president has basically the Congress are starving the SEC for cash. And whether you think Gensler's an idiot or not, I do think he has a fair point that he has to pick and choose his battles, and he doesn't have enough political capital to take on the vested interest that Ken Griffin throws money at. So yeah, it's a long uphill battle.
Well, yeah, and that's the thing. I don't think they ever expected, social media and Twitter to get as powerful as it is for against them. Exposing all the things that they're doing in the back, and people are learning at such a rapid pace that they can't stop it. So, like you said, even when they're changing the new rules, we can tell them exactly what's happening behind the scenes. So.
Yeah.
That's why I feel like they're attacking. Every single time they come on here, it's like, God, we got to go after these guys on Twitter. They can't control us, but yeah, they go to the media that they own a stake in, and they can control the narratives. But they do the same thing.
Yeah.
So,
Yeah. No, exactly.
my next question here I got so with June, you got Libra switching over on June 30th. You got 9-month contract expiring June 1st. They're saying the United States will default on the second week of June. Do you think anything, do you see June being a spicy month? Do you see June being a crazy month for the United States? Do you see collapses coming around that time? Or do you think June won't be anything crazy? Do you think they already have backup plans for all of this?
Yeah, I was pondering this before the call. So Janet, yeah, okay, there's a problem with, okay, let's go to the debt ceiling because this is a sailing issue. So Janet Yellen said that if no agreement is reached by June 1st, the country will go bankrupt and, the country will default on its debts. And then it is catastrophic for the U.S. and global financial markets. So that is her first point. So insofar, where is she coming up with June 1st? Well, that's basically where her special measures from the Treasury Department are seen to basically exhaust themselves. They have whatever 180 billion left or something, and they're losing 30 billion a week through expenses. Um, I mean, I'm probably misquoting that number in terms of how much they have left, but yeah. So she said June 1st, which is now 2 weeks away. So the other problem is like, I don't know how to put this. The Treasury and Fed always reveal all their cards. for example, I posted on LinkedIn yesterday. Someone noted Jim Rickards actually. So they, if the U.S. does actually have the gold they say they have, it's all valued at like $44 an ounce, which was the something in 1953. So if they wanted to market the gold they have, they could make $500 billion in an instant and just say, oh, look at this gain we got. Here you go, Treasury, 500 billion. So I mean, all this problem is it's accounting issue in terms of the debt ceiling, and they're just playing around with accounting tricks to try and find money. So they still have some accounting tricks up their sleeve. So this drop dead date of June 1st is sort of made up because she's just trying to get Congress to stop screwing around. And as I mentioned, this is a perennial issue, and it keeps happening every few years as the federal deficit keeps going up and up and up, and there's not debt pay down, so they keep having to raise the debt ceiling. And either they need to come with a final solution, but they don't, because they like these little crises. Never let a crisis go to waste. And it's like, again, I mentioned the Iowa Republicans dickering around with ethanol rebates. So it's like, yeah, like everyone wants their little cut. So they're all going to drive this to like the end moment. But the end moment really isn't June 1st. I think it's probably sometime in June though. So yeah, I do think the unknown factor is the result of all these swap resets. First of all, yeah, like I said, I don't really want to go into LIBOR because I haven't done enough looking into it. But that being said, I mean, June is sort of like they've already had 2 years to start getting off LIBOR, and a lot of there's been a lot of like, oh, it's just like oh, we need T+3 for a few more years because we need to adjust our systems. Same thing with LIBOR. So they've had 2 or 3 years. Their time is running out. So if you still have LIBOR fixing, you need to switch to the new setting, which is basically the overnight, whatever the average of the overnight repo is. So SOFR, special offered. I hate these acronyms. Anyway, the fact of the matter is that that's going to be an unknown factor as to how many people are still stuck on LIBOR and what impact that'll have on the swap market when they switch over. The next issue, of course, is like the ISDA Phase 6. How many grandfathered swaps? Like, you're more into this than I am, but I mean, it's like if you have a neutral third party, at some point, all these grandfathered swaps need to get reset correctly, revalued correctly. And whether it be 9 month or whether it's September 1st with a 12-month, I would assume they'd want to try and drag it out as long as possible, but it's possible that some swaps are coming due under Phase 6 in June. So I honestly think June could be very messy, but I don't have a conviction as to how bad it could be. All I know is Janet Yellen is creating hysteria by all these headlines that she's, again, I honestly think she's trying to push for a settlement within the next 2 weeks. And, you see the Congress is apparently is talking about it this weekend, and, mumblings of, yeah, we're making progress, whatever. So I think there is a big incentive for Congress to get this done. And Janet Yellen will continue to say doom and gloom. And, of course, like anything, like a margin call. Oh, margin call, 72 hours from now, and then nothing happens on the Friday afternoon. Well, there were ways to get around this. Oh, we got an extension and everything else. So the Treasury does have the ability to do this gold revaluation. Or, I don't think $1 trillion coin is the way to go, but they have tricks that they haven't revealed, because they, it would be really catastrophic if the U.S. defaulted, because especially in June with all these swap resets. So, yeah.
I saw that $1 trillion coin. If they did that, what would be your opinion on the side effects? Because that'd be like just printing out a quick trill.
Yeah, I mean, again, it's like ultimately some dollar weakness initially, then like some like, okay, well, again, it's still the best option, and then longer term, it's like, yeah, we got to get out of. So what happened in 2008? Chinese weren't very happy with quantitative easing when Fed announced. Bank of Japan had been doing quantitative easing, but Bank of Japan was seen as an outlier in their little strange little world in Japan. But when the Fed did it in 2008 to deal with the consequences of the financial meltdown, China wasn't happy, and they were like, "Oh, this is not good. You're basically devaluing the bonds. We have a huge amount of your treasuries." So what's happened since 2008 is China has reduced its stock of U.S. treasuries. Russia got out of treasuries completely, but that was for a variety of reasons, not just that. But China's been reducing their stock of U.S. treasuries, so that would accelerate a lot of countries would just say, okay, this is U.S. dollars trash. We can't sell it all at once because it would, we'd kill ourselves. So this is why you don't see China selling $1 trillion of treasuries every week or whatever. But I do think the U.S. doing something like a coin, such a bogus, it just like, again, it's like, you can't, it just would undermine the entire stability as it is. Like things like the FDIC saying, oh yeah, we're going to insure these banks, even though we had a 250,000 limit. The limit doesn't mean anything in this case. So I think the more you do that, the less credible your administration becomes. And so, yeah, I think that would be a very bad choice for them to make.
Oh yeah, I mean, but at this point, what's left of the credibility anywhere? You know what I mean? As we find out, it's just nothing but God. They're just crooks everywhere.
Yeah.
And that's well, you kind of answered this next one because I was going to say, I mean, looking forward, I feel like there's no, the red Feds have no choice but to raise rates going forward. Do you think the Feds will keep raising rates, and what will that do to the U.S. going forward?
Well, yeah. So as I said, the Fed is basically announced they're on pause. They went 25, but the accompanying language was basically, yeah, we're in wait and see mode. Um, I've been saying this for months, last year or two anyway. The Fed is create by raising rates so quickly relative to historical norms and raising them aggressively. They've created an unknown situation. It may be that there's no catastrophic drop in economic activity, or there may be like a delayed impact as things like for example, rents are actually decreasing in the U.S. for the first time in 2 years. But you typically what happens is, again, the commercial real estate, their loans are going to reset. They're going to have to increase the rent they're charging their tenants. Will the tenants be able to afford the new rent? Nope. They'll have to close down, either move to somewhere else, or they'll just have to shut business. And so you have this unknown crater in the road down the highway. You don't know if it's there at all. You don't know how deep it is. And until you get closer, you won't know. So meantime, the Fed is stuck here. They basically are saying they're done. They're looking at like Elon Musk is always tweeting about this. Like the Fed is using data that's backward looking. It's not particularly helpful when you're trying to drive and figure out what the hole is in front of you. Um, and prime example is, say, the non-farm data, which came out last week, 2 weeks ago. Sorry, 240,000 growth. Market was looking for 170 or something. Oh, that's bullish. But if you look at the revisions, the job revisions were negative 175 down. So on the whole, that wasn't a very impressive report. And what that speaks to me is like, yeah, there's a lot of shuffling around because a lot of people got like 3 month severances, or 2 month or 1 month, or whoever you work for. But a lot of tech people lost their jobs. Those are high paying jobs. That has an impact. It hasn't really been felt in the economy yet. The housing market has a huge impact on it. I haven't looked at I don't remember the U.S. housing starts, but I assume that the cost of basically getting a mortgage is significantly higher. So, housing sales are probably slowing. Again, that's not going to drive the U.S. economy. So, the U.S. economy should be slowing in the next year or two. That would imply the Fed is done hiking, but it depends on really what the Fed chooses to focus on in terms of data. And if they're just going to focus on inflation, which is still well above 3%, and they're going to focus on, oh, look, the job numbers are so positive, so the job market's strong, even though underlying trends of the job market are not strong. So the possibility is they could keep raising rates, but the problem is, as we talked about, that also has implications for the U.S. budget deficit. That has implications for treasury market. It has implications for the mark-to-market losses on the balance sheets for all the bonds. All the banks that are holding these bonds. So the Fed, I think, and I've been saying this, the Fed is going to get stuck at some point, and I do believe that the Fed has already been stuck. It just, 25 last 25 is minor compared to what they've already done. But if they keep hiking, I do think it would have the impetus of probably creating a major recession. So, I mean, again, you look at the inversion of the treasury market. The long yields continue to be significantly shorter than short, and a lot of the short, and in the very short, the debt ceiling crisis is creating a lot of noise there. But if you look at the 210s or 230s, still inverted, and that tells you that, yeah, they're expecting a slowdown. They're expecting the Fed to reverse rates at some point. Just when? Just I don't, whether it happens later this year, maybe not, unless we start to see an acceleration of unforeseen consequences of the Fed's previous actions. So I guess we'll wait and see. But I would be very skeptical of seeing them hike anymore. But I think they have to stay hawkish. So it's kind of like they're not going to give the market any sense of like relief, but I don't think they can really afford to keep hiking without causing something to blow up.
Thank you. Actually, so that's everything I brought down for my questions here. Let me see if anyone has any on YouTube. But is there anything you want to talk about or go over at all?
No, I mean, just a little bit about the court case. I mean, I'm sure people have questions about that.
Oh yeah, that's the last question I wanted. Sorry about that. Yeah, go ahead on
I
that,
mean,
please.
I try not to go after people on, like, I don't want to get into feuds. I'm not looking to boost, followers by like trashing on someone. But I mean, it has to be said, if you look at the court case now, the biggest issue to my mind is like the reverse split. The vote has happened. It's going to be implemented. It's just a question of when. But if the judge had to get a special assistant, whatever the name is, master, whatever it was, so she couldn't handle all the paperwork regarding individual investors and comments and all this. So she needed someone to help manage that flow. Now, if you're gonna come up with some very dubious objection to her based on the fact her brother worked in the entertainment industry, um, that seems kind of spurious to me. And the whole point is you trying to get this person removed so that she has to waste time the judge has to waste time to find another assistant. So the idea is like, what would the possible motive for you to do this unless you wanted to delay things further? So the judge says, no, you haven't provided sufficient grounds for my assistant to be dismissed, and she basically says she's in neutral. And what does he do? The next day files another similar request. This still doesn't have anything the judge asked for. So it's spurious. And I've heard that further following, this is all to delay things. Now, why would you want to delay things more? Well, I don't, it's like because you don't want the reverse split to happen. That's my only explanation for that. So, like, then it's like, oh, the reverse split will kill it. We've gone through all that FUD. Regardless of that, I just want clarity in this play, whether it's a good or bad thing. I just want it to happen to get it over with. So, like, there's people like Lou that will say, oh, this delay is great because AMC will scream higher because the shorts are paying high borrow fees. Well, they're still paying high borrow fees, and then they're not paying high borrow fees. They're manufacturing synthetics through the option market, which you look at sometimes the open interest on out of money puts and calls is ridiculous. So, they're obviously doing something in the option market to create synthetics. But anyway, they're not, the AMC is not racing higher. It's not screaming higher. So Lou is wrong. So this delay is not helping us in terms of seeing AMC go up. So who's benefiting from this delay? And so why would you keep submitting BS submissions that are wasting the judge's time? And the only flip side of that is like the judge is not a stupid person and can see, I've warned you, like I've said, like give me more basis for my ruling if you're going to make an objection, and you don't. So you're just wasting the court's time. So anyway, that's I saw a poster that like attacked you because you were making fun of that person, and it's like, well, you like clearly, and I took a look at the followers of that person that attacked you, and I saw Roger Hamilton as one of his followers, and I saw a whole bunch of people I'd already blocked, like Playas or whatever her name is, who admitted that she's paid to spread FUD even if she doesn't have AMC. So it's like it's the same crowd that's doing the same BS, and all I can say, guys, is just like tune it all out because Twitter is just it's a sideshow of idiots, and you just look at the motivation for creating these delays to the judges. Like, I'm glad the judge has the time to deal with it, but it's like, at some point, it's like there's no clear benefit to doing this other than to waste the court's time. And why would you want to waste the court's time? So that's my comment on that. I'm a little frustrated just because I see it and it's nonsense.
Well, the guy's an idiot. I mean, he just put his thing to private. Now you have to pay to fucking monthly to get him, and now it's $50 to talk to him. Like I said, it's all just stupid. And well, let's kind of go into the reverse split and these guys' points, and let's talk about that. So after this will all happen, there'll be 156 million, and then with the lawsuit, whatever's going to happen, I'll go ahead and look at how many are going to be there. But either way, we're going to get to that. So with that being said, everybody instantly says the cost to borrow, oh, it's so high right now. We don't want to do the reverse split because the cost to borrow will go away. Well, the float will be smaller and almost all of it will be accounted for. It's not like all these new shares come out.
Yeah.
So the cost to borrow should still be as high, if not higher, correct?
Yeah, I mean, I don't see why a reverse split would lower the cost to borrow. It's like you are already having a hard time finding shares. So a smaller float means there's less shares available. I mean, it should imply that they'd be even harder to find shares to borrow. And the other thing is, like, you're going to have less float. That means creating synthetic option positions is going to be a lot more apparent. It's like there's 100 million. Like, how many options did you create? Doing this, I don't know. It just I'm not 100% sure of my convictions here, but I don't see why cost of borrow would go down in the reverse split. So that's not something I'm really dwelling on.
No, that's just one of the things I like to push. And then on top of that, the next question. So the next thing they like to push, it'll be easier and blah, blah, blah. Is it not true? It'd be harder for them and could be more expensive for them to open new short positions on a more expensive base of stock with the same exact, if not higher, cost to borrow.
Yeah. I mean, and this is where until this happens, we don't know. So, the whole point about a new QSIP and all this, will this cause a squeeze beforehand? The delay, the whole court thing delaying this thing, I've been saying, well, there should be some sort of positive price action before the reverse split, but because everything keeps getting delayed, we haven't been able to see that, and I haven't been able to test my empirical theory on that. So, but if shorts are kind of screwed in the lead up to the reverse split and they take hits, how many are they going to jump back into AMC after the reverse split if they've already been burned on it? And if the fundamental story is better, they're assuming status quo. It's like, yeah, like we were short for the last 2 years or whatever. We've been rolling this through swaps or whatever and options and blah 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 blah. But now we just finally had to cover because of the new QSIP. But the fundamental story is bad. Do we really want to lock in and like, if you get burned playing blackjack, do you really keep playing blackjack, or you just go play roulette? And it's like, you gotta, is there a better play for your capital if you get burned? So I don't think it's obvious to me that unless the price doesn't change at all, again, goes up to a factor of 10 or whatever, but besides that, there's no squeeze or anything pre reverse split, then okay, yeah, maybe the status quo, but I don't see the status quo staying the same, but I can't test that because we haven't been allowed to get close to the reverse split date. It keeps getting pushed back. So that's a frustration. And someone pointed out, well, it's like BBIG just did a reverse split. I don't have any clue about BBIG. I was in it 2 years ago. I got screwed around. I made some money on options. I lost some money on options. I gave up on BBIG. I have no idea what's going on with the reverse split, whether it's comparable to AMC's. But they're saying, there was no squeeze in BBIG, so there'll be no squeeze with AMC. I have no basis because I haven't been looking at BBIG. But to me, it's like every situation is not the same. You can't like, COSM is not the same as AMC. And COSM did a reverse split on a Thursday night. Friday it had that wacky, whatever, $2 to 14 because Robinhood accidentally sold short the thing and then had to cover it up. But we weren't allowed to participate anyway because my broker never allowed me to sell my COSM. So, it's like there's all kinds of differences in all these plays. I don't know if you can apply, again, reverse splits never work. That's not necessarily true. Sometimes reverse splits do help.
And not only that, after this, it's like AMC is a lot different of a reverse split. They can go ahead and instantly after this raise multiple billions of dollars. Yeah. None of these other splits that these other companies are talking about had that ability even right after. They were in bad financial positioning. And that's the thing. This is why these guys don't want the reverse split to happen. AMC, they're still burning cash. They're still burning over 100 million. Q2 might be a great Q. It should be an amazing quarter. Popcorn's selling off the shelf. Credit cards were doing great, but we're still losing money. And they still have a massive amount of debt ahead of them. So even if we start to barely get cash flow positive, it's like, Okay, that's great, but you still have this massive, pile of debt that is controlled by the lenders who are fucking you. And this is why I keep trying to explain to everybody. These guys control your debt. They don't understand the covenants, the rules. They have these restrictions, what AMC can and cannot do with a certain amount of money. Until you get them out of there, they control AMC's finances. So you people you hate and are against you and want the company to fail are in control of its finances. This can get them the fuck out of the company finally for the first time in the entire play. That's why they don't want it to happen, because they want AMC to keep getting down, and burn down a little more and a little more. And the short thesis is not destroyed yet. The reverse split in this case kills the short thesis, because with it, AMC will never go bankrupt. It just won't.
Yeah, and that's the thing. It's like, people go, oh, Adam Aaron sold us down the river with Antara. Yeah, like, and he bought 100 million of Antara debt. Again, it's a situation. I'm not. It's like, yeah, Adam Aaron gave Antara a sweetheart deal. They bought it 66 cents. They wound up selling it $2 or whatever. They've been sitting in the middle of AMC options every week, fucking us over, basically, capping the thing. It's frustrating to see it, but yeah, like this is the thing. Antara had some of our debt, and this is it. These jokers basically control the debt, and with controlling the debt, they dictate what Adam can and cannot do sometimes. So he has to, what is Adam totally this paladin? Virtue. I know a lot of people love him, meet him, and he's very personable. I've never met him. I don't have any kind of like I'm, I don't mind people posting pictures of meeting him. It's like, it's not like I'm not going to, oh, you guys are a cult. But on the other hand, I'm not like in this fan club either. I just acknowledge that, he's a corporate executive. He has to make hard choices. And sometimes they're not palatable. And, giving Antara some free money, or giving Mudrick 2 years ago, Mudrick was stupid, but that's another story. But yeah, like, he's got to work with these jokers, and I don't like it. And I would prefer him not to have to work with them. In the meantime, like, it's frustrating, because I try and, like, it's hard to justify to people that want, like, show me how he's working for us when he's giving Antara a free deal. Well, he did give Antara a free deal, but it's a longer term. Again, it's a longer term perspective, and you guys are in this for a short kill, and it's not. Unfortunately, it never. If it was a short kill situation, it's devolved into a longer term kill situation, and I don't particularly like to have that happen. I've been sitting on this for 2.5 years. I want it to be over, guys. I do, but reality is, you got to face the consequences of the other side's actions, and that changes the no war plan changes. No war plan. Sorry, no war plan stays intact with conflict with the enemy. So they've fucked around. They've gone. They've done things that I didn't even imagine they can do. So yeah, like and Adam is not working solely for a squeeze. He's working for the fundamentals of the company. You have to consider Adam Aaron not your ally, but more like he says he's an ally. He's more just another piece in the board. So he's generally going to act in ways that are going to favor your position, but unfortunately not on the time frame you're looking for. So that's the biggest issue. A lot of people have issue with, I'm done with this play. I want out, and it's like Adam's not helping. It's like, well, Adam's going to do what's best for the company. That's not necessarily what's best for the squeeze. We've said this 100 times before, and I'm frustrated because like I would have loved to make some money, and it's created a little bit hardship for me. I've had to change some spending. I had to cash some other investments that I didn't want to cash in. I used to have a huge silver position, and that silver's been screwing me over. So I had to, decide whether I wanted to keep AMC or silver. So I got out of some of my silver, and it's just you've had to make adjustments. And I know people are down, and it's hard to see how to be happy when you're down 50% in your investment or more. And meanwhile, Adam seems to be catering to Antara. Well, he's catering to Antara because he has to. As you said, these debt obligations are freaking annoying. And here's the thing: if we don't do a reverse split, he's got to sell more ape. And if you got a crap load of ape, you're going to get screwed over. So yeah, it's like, oh well, you're just working for the hedgies because the hedgies have a huge lot of ape. Yeah, they have. This price differential between ape and AMC has to be addressed, and it will be addressed in the reverse split. So, I mean, it's like if you're against the reverse split, you're basically saying, well, anyone that has ape is screwed in my book. So I I don't know what to tell you. I have AMC and ape. Pretty much. I was 1-1. I have twice as much ape as I have AMC, but that's again, I'm expecting with the reverse split being agreed to, that at some point it will happen. And so yes, at some point ape should go up in value, or AMC will go down in value, but AMC can't really go down in value because it's hard to borrow and it's expensive to borrow and it's expensive to create synthetic options. So you don't see the short ladder attacks as often as you have in the past. So I think it's going to be a case where APE will probably drive up to AMC, but is AMC going to 10 and APE go to 10? I don't know. I doubt it. But so there's a lot of piece of FUD that I have to address because someone CC'd me. So 2 years ago, there's this video clip going around, especially from the other side is presenting it. It must have been the second one of Trey's streams with Adam Aaron. And Adam Aaron says something to the effect, I don't even know if it's doctored or not, but he says something, I've never considered doing a split or reverse split. And okay, and then they're saying, oh, Adam Aaron lied. It's like, okay, here we go. Like, when did Trey do these videos? He did one in early May, maybe, the naked short one, and then he did the second one, which was right before the vote, I think in June, after the squeeze, and so it would have been like mid-June. So this is June 2021. Now they go on about, APE was conceived by Citibank. Okay, yeah, but apparently that was November 2021. So in between June 2021 and November 2021, even if the reverse split as part of APE was conceived of in November 2021, that's still 6 months where things had changed. Basically Adam said, no, I'm not going to ask for a vote for more shares. And so 6 months went by, AMC was manipulated up and down and all around. And so would it be possible he changed his mind in those 6 months in November when he started talking with Citibank? Yeah, quite possibly. So again, plans change with conflict with the enemy. It's like the enemy did stuff. Adam Aaron's looking at the situation going, yeah, like I don't know if November 2021, I didn't go into that whole Citibank, whatever the Operation Popcorn crop, I didn't want to get into it. But if that's the timeline, then again, it's 6 months between the time Adam said this, if he said this with Trey, and the time that Citibank started designing this thing. So anyway, that's like this kind of stuff, everyone gets excited about it, but they need to just sit back and do some critical thinking, because again, there's a lot of noise and FUD being generated on innuendo and not complete information. And so from that point of view, I find it hard to stay on Twitter sometimes. It's like either I go freaking ballistic on some of these idiots, or I just say nothing and talk about reality TV. So that's where I'm at. I mean, we're waiting for the end of June, wait for the judge to say if in fact people want to present this video to the judge, well, that's fair. She should have that information if she didn't already. I would assume Adam Aaron might have disclosed this to them already. I mean, I don't know, so anyway, that's my spiel on all that. It's like people can use their critical thinking or not, but to me, it's like it's a nothing burger.
Yeah, I'm just going to go on all that stuff you said for just a minute here real quick. So one of the things about all this too, it's like, okay, so, if I'm wrong here, there's another one that I'm not thinking of, let me know. But, so it's like the company, they're attacking Adam Aaron for having this. And like I said, that's the funny thing is I'm not an AA lover. Like you said, I get he's a CEO. He's going to do things for the people that he owes debt to. And the thing is, it's like most people don't get AA's got to look at it too. Like, all right, if these retail leave at any moment, I have no choice going forward but to rely on the banks, these lenders, to give me more money because I don't have it. I can't go into the bonds. I can't do any of these other things right now. So the way I'm looking at it is and then Citi or whatever, they might have looked at it and saw they had this war chest and they go, well, the 3 ways we can make money is bonds. Well, that's not an option right now. Offerings, well, we don't have shares of this common, but we can create it by doing this and raise a massive amount of capital. Or revenue. Well, clearly revenue's not making enough to where we could pay anything down. So for them to go ahead and say that, oh man, this was a malicious thing just to fuck us over. It's like, no, you had the CEO looking over and going, hey, I have this weapon in my war chest right now and I can go ahead and switch it over. We can get money. And with the Antera deal, this is the thing. I've never defended it. I think it was, I get it. I see what it is. We all see it for what it is. It was, hey, I'll give you this now. I'll give up a little now so I can get a lot later. I can get billions later. This guarantees we all know. We can see what the hell it was. It wasn't like it was, it's not crazy. We're not stupid, but it's like you said, he has to continuously work with these guys because A, they have their debt, and B, if retail ever does get sick of it and leave, what is he going to do? He's fucked. He has no choice but to work with these guys again. And that's why they don't want this reverse split, because that gets him the money to get out from under them, never need to go back to them again.
Yep.
And he's free from them completely.
Yep.
And that scares the fuck out of him. And also now he's debt free, and now he's got the biggest backing of retail behind him. Like I said, if you're a short at that point, I'm scared shitless, because if he ever needs to do anything, he can sell a little bit or raise a little bit. And even let's say we do the split, he sells 100 million shares. Let's say we go to 40, 35, 45, whatever. And all of a sudden he raises $4 billion. Well, we can see, you know, he can go ahead and pay that off at a massive discount. Well, that $3 billion might be enough to erase, you know, 4.5.
Yeah.
Or whatever, you know, he can get rid of. I mean, he's been doing it at a 30, 40% rate. So if he does that at that rate, like I said, now it's manageable debt. Your float's still 250 million. That's still a small float compared to what we've ever had going forward. You know what I mean?
Well,
so it's like there's so many positivities. And yeah, I did, but you know, and yeah, like I said, the Antero deal, we all know what it was. Like I said, but it's, you have to give up a little bit sometimes to get a lot in the end.
Maybe the only question, and I've seen people push back on this. Yeah, like 4 billion AMC could do, but yeah, who's going to buy it? That's the FUD retort I've seen before. It's like, oh, you really think people are going to? Yeah, you know, it's like it's questionable how much AMC can raise at a given issue, but it's certainly like given the number of shorts, I'm sure there would be interest from, you know, some people to cover their, you know, it's like there will be the ability to raise. He's able to issue money through ape. So, and I'm not saying it's retail that's going to buy like the 4 billion of equity. It's like, but that, yeah, there could be more equity. Like there could be more interested buyers, institutional. You don't know, and until he is able to try and do it. I mean, but the fact is he's been able to issue ape at a bad price. That's the only issue with ape. So the question is, can he raise enough money through AMC? I think over time he can. Yes.
Well, and that's the other thing too. That's what I always said in my other things that I forgot to do. And now, once again, when you do this reverse split, you raise capital. You now are, you know, more interesting, attractive stock to investor, you know, institutional investors, other investors. Now you can get FOMO back in, because now, you know, you have a company that has billions getting closer and closer to profitability, maybe even be profitable. Now you all of a sudden you're debt free and profitable.
Yeah.
What could be better than that?
Yeah, no, exactly. So, I mean, that's where I'm at. It's like I'm impatiently waiting, like still waiting, and it's, you know, it's like I feel like, you know, you were moving, so you didn't post any content for a while. Like I'm basically at my like wits end. You know, for me, what's going on with all the debt stuff we just talked about, like the U.S. Treasury ceiling and everything else, that to me is like riveting. So it's hard for me to really care about like minor DD. People are always DM me stuff about, what do you think about this? You know, should I do this? And is the dollar going to collapse when AMC? You know, it's like I can't even muster up the energy to reply sometimes now. It's just I get a lot, and it's a lot of stuff. It's like, yeah, like in the grand scheme of things, this is a minor issue. So is that this stuff I just talked about with AMC? It's like whatever. Let's wait. Ultimately, we're waiting for the judge. So everything else is minor. And yeah, like the lunatics on YouTube that have to produce 5 videos a day because they're really just a grifter for YouTube content. Yeah, they've got to put out like, this is the week AMC, or it's just like, if you want to be entertained, guys, listen to that stuff. But I mean, a lot of it's just noise. Until the judge rules, everything is just noise.
Yeah, and the other fun they're putting out is, oh man, we got to pay that $100 million, which actually no, AMC's in lawsuits right now, so their insurance companies pay that.
Yeah, and then, of course that like AMC's suing the insurance companies for refusing to pay. Now that's an interesting one. I have no firm view on whether insurance companies will always find a way to not pay. Oh yeah, that goes back to the certain $1 million share guy. His original theory before everything else that went through with him, he said, oh, the DTC will pay for everything. Well, the DTC had insurance, but would the insurance pay for all that? Probably not. So don't expect $1 million per share. And this is the same guy that's wasting your time, telling the judge that her assistant's brother is in entertainment. So I have a little bit of a beef with all that. But
when comments are turned off on your videos, there's your sign. If you're not a big boy enough to have people say stuff against you or prove you wrong.
Yeah, it's tough. I mean, honestly, YouTube seems to me like the YouTube's like I don't really go on YouTube. Like you obviously got your YouTube channel, but to me, like it's a constant swarm of bots. And it's just like it's so much noise and bots. It's like I can't even bother reading the comments anymore. But yeah, like the fact you're not even willing to be open to criticism. It's like I will block people on Twitter because there's been too much stupidity. But on LinkedIn, I generally don't block anyone. And sometimes but the fact is, I know who I'm debating with. I'm not debating with like Elbow River 968. It's like I know who this guy is based on I can see his track record and where he worked and everything. So people are I'm willing to have a discussion with someone I believe is a real person, but it's hard to interact with bots. So.
No, I hear you. I get them all the time now. But I got to get going here. I'm going to actually go see. I might head up to my cabin here. Actually, my wife got up early, so we're going to go up there and see my mom.
Oh, excellent. Okay. Well, it's a pleasure. And yeah, hopefully we can redo this in a few weeks when June gets here. So.
Yeah, it's like I'll be really excited then. Get your popcorn ready. Find any
Absolutely.
AMC popcorn at all, or they haven't gotten any yet?
Oh, I had a very generous benefactor send me like 15 bags, so I've still got like 10 left. So.
Awesome, awesome. I just found my first 3 bags like 4 or 5 days ago. Finally came.
Nice.
But thank you so much, Peter. Appreciate it, and have a good Mother's Day, man.
No problem. You too, man. Bye-bye.
Thank you. Bye.